Hi traders, welcome back for another video with the FX Big Dog. In this video, we're going to take a look at trading systems and the importance of tracking the data so we can take a good system and make it great. Well, traders, we're going to go ahead and take a look at a trading system that's been very successful over a period of 5 months so far. And in fact, this trading system, I've left it completely on its own. It's completely automated, but it's doing really good. But I want to go ahead and take a look at the data. So what we're going to do, we're going to go through the details that I go through when I look at a system, when I monitor it, and I take a look at the data. And what are the important things that I look for? Now, this trading system is called the opening bell striker. And it's called the opening bell striker for one reason. We focus on the opening sessions. So every time the market opens up for the London trading session, the New York trading session, as well as the Asian trading session, we want to be able to take trading opportunities during that period. Now, let's go take a look at the charts. I'm going to show you what the system looks like. And then what I'm going to do is I'm going to go into the data. I'm going to tell you what the data is important to me that I'm excited about. And I'm going to look to see if I can make any changes to the system. So let's take a look at the charts first. So here we have the charts open right here, and I'm using the smarttrader.com trading software. And you'll notice right here that traders that what I'm looking for right here is trend. I'm using an Ichimoku cloud as a trend indicator, and then I'm also going ahead and I'm looking at the market's volume, whether it's either bullish or bearish, based on this oscillator below. And you'll see right here, this is the oscillator that I'm referring to right here. This oscillator is telling me whether we're bearish, all right, based on momentum, and whether we're bullish, all right. Now, I'm also using different moving averages as well to indicate whether the trend, the short-term and the long-term trend, is intact. If it is, we've got a trading opportunity, all right, as long as it's in the same direction. Now, the most important thing right here, traders, is that we manage the trades successfully, all right. And so the system has a managing system that takes the trades and manages the positions for you. And that is exceptionally important, all right? We have to have a good management system in order for a system to be successful. So let's take a look at the details. Now, the trade entry point is going to place you in based on the conditions. If the conditions all line up, we're going to have either a buy or a sell signal. Now, what's going to happen is the stop loss is going to be placed at the last major high or low, and it's going to chase after the same risk-reward ratio, which means this. If we're risking 50 pips, we are taking a 50 pip profit. So it's a risk-reward ratio of 1 to 1. Now, why is that important? Well, it's important when you look at the data, because if the data is reporting that you're making a 50% successful trade, if all your trades are 50% successful, then that means that you have a 50% successful rate with a 1-to-1 risk-reward ratio. Now, let me explain what it means to you, all right? This means that when you trade and you're risking 50 pips and you're gaining 50 pips, if you're losing 50% of your trades and you're making money on 50% of your trades, guess what? You're pretty much breaking even. So if you've got a 1-to-1 risk-reward ratio, you should have at least a 60% strike rate, which means that you're successful 60% of the time. Because if you're not, you're breaking even. Now, this is where the details come. This is where the details really explain something. Let me go into the actual details right here. Now, what we have here is, and I'm going to go ahead and give you a wide screen on this. What we have right here is the trade results over a period of 5 months. Now, you can see as I go through the trade results here, I'm going to go right towards the probability. This is important right here. You can see that we've won 60 out of 125 trades. 60 out of 125. What is the percentage? That is a 48% strike rate. That means that we are successful 48% of the time. If you take 100 trades, we've only been positive on 48 trades. Now, I told you early on that the risk-reward ratio is 1 to 1. Now, think about it. Take a moment and think about it. You've got a 1 to 1 risk-reward ratio, and you're successful 48% of the time, that means more than 50% you're losing on these trades. Is it possible that you can be successful? Is it possible that this trading system can show positive results? And the answer to that is yes, it can. And you say, well, big dog, show me the money, right? Show me the money, right? Okay, well, this is the deal. What's important in a system that has a one-to-one risk-reward ratio, and what is important from a system that is only showing a 48% success rate, is that we have to have a good money management system. What does that mean? That means, traders, that as soon as the market gets into a trade, we've got to start protecting that position as soon as it moves in our favor. Because listen here, the system's extremely powerful and it's a trend indicator, right? It's a trend system. So as soon as the trend starts taking off, the system implements a trade. Now, when we implement a trade, what's happening right here, as soon as we implement a trade, the market's going to be able to, or at least the system's going to protect our position in the market. So which means it's going to place a stop loss for us, but it's also going to protect that position and start locking in profits very quickly. Because if it doesn't do that, with a one-to-one risk-reward ratio, if we don't start locking in profits and we take losses of that, the full risk that we implemented from the beginning, that means that we're risking one-to-one with a 48% strike rate. This is going to be a losing system. All right. Now check this out. Let's go to the system again right here. Check this out. If I go to, here is the system's track record so far. You can see we picked up 7% for April, 4%, 4.7% in May, 3.4% in June. We lost 3.5%. Listen, we all know that it's going to be losing months. We understand that, right? But this month we're up 4.42%. All right. The only way we can get such good results from this is if we've got a good money management system in play, which we do. And so that, to me, tells me, by looking at the data, I'm looking at it and I'm saying, okay, the next thing I want to go ahead and look at is how many times have I got, let's put it this way, how much am I averaging out on my wins in pips, and how much am I averaging out on my losses? So check this out. This is the reason why the system's successful. Take a look at the average wins here on the left-hand side. If you look at the average wins, we are making 53 pips, and we're averaging out at a 35 pip loss. So that means we're making more pips than we're losing. That's a good sign. That shows a great winning combination. Also, take a look over here. What's also great about this system right here is that we've got if you take a look at the trades, we've got 125 trades. Now, 125 trades over a period of 5 months means this. Traders, means that you're trading about 6.25, call it, trades per month. That gives us around about one trade, not per month, per week, 6.25 trades per week. That gives us about one trade per day, a little bit more than one trade per day. And that means that the system is constantly keeping you in the market, but not over leveraging your account too. Those are the type of things I look at as well. Because when I look at a system, I want to make sure that I'm not exposing myself too much at any given time. I don't want to run into deep losses in one trading day or in one trading week. So I want to make sure that I'm having consistent trades, but not over leveraging my trade, which the system does, which is great. So when I look at the system right here and I go ahead and I say, what can I make? What changes can I make on the system to improve it? Because the results so far are fantastic, all right? And I can see that I'm diversified across the board with different currency pairs. So the one thing I can do right here by taking the data, I can look at two things. Number one, I can take this month right here, this losing month in July, and I can say, July, let's go to all the trades in July and see why we took a 3.5% loss in that, and see how we can improve on that. That's one. Number two, we can also go into our where is it? A little further up, our summary right here. And the summary is going to give us the breakdown of all the trades that were being implemented and what has been negative, what has been positive. And what I'm going to go ahead and do right here is I'm going to take our positive trades right here. And you can see right here we've got like the euro pound. The euro pound has put us into 11 trades. And out of the 11 trades, we've managed to make a 73% success rate. We've got a 73% strike rate on just the euro pound alone. If you go further on, you take a look at the New Zealand US dollar. Here we've been putting in 11 trades. We've got 86% right here. That's a strike rate of 86%. So what am I saying to you, traders? What I'm saying is we can go through this list, take all the top pairs over here that's showing a good strike rate. We want to get rid of those trades like this, right? We want to get rid of these trades that are showing like the Aussie CAD. It's got a 20% strike rate. Now, I can also look at this and say, okay, how many trades did we implement? Well, we've implemented 5 trades. Out of the 5, I've only made 1 good trade. That's why I've got 20% strike rate. So these are the type of pairs that I can go ahead and throw out and say, well, I'm not interested in those pairs anymore because they're not producing the type of results that I'm looking for. So which means that these currency pairs could be non-trending pairs, it could be very consolidated pairs, whatever that is. Take a look at the data, take a look at the chart, make a decision, and start throwing them out. Well, traders, that's what I do when I take a system that's doing very well, and I want to try and convert that system into something a lot more successful. And then how I can take the data and I can improve on the system. And sometimes, traders, you may sit back and say, well, I don't need to make any changes. But I think it's important to, at least on a quarterly basis, look at the system, look at the results, and see if you can go ahead and make some adjustments. And if the system's doing well and there's no adjustments being made, that's fine. Leave it for another quarter. Go ahead and review it after another quarter. I hope this video helps you and helps you to improve the system that you have running, and I hope it brings success to you. This is the FX Big Dog. See you in the next video.